Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It's Monday, January 30th. It's 10:30 a.m. UAE time. It's a week in which all the central banks are meeting to make their latest pronouncements, including the Central Bank of Oil, OPEC Plus, due also to meet this week. Oil trading early doors out of Asia, a little bit down 0.5% on early trade, having been up a little bit. Let's kick off as always on Monday morning with Omar Najia, Global Head of Derivatives at BB Energy. Omar, looks still like a market without any wind in its sails. Your thoughts this Monday morning?
Yeah, I think so, basically. But to be honest, uh, I'm a bit I'm a bit surprised because everybody keeps talking about China coming back, China coming back, China coming back, and the market doesn't seem to want to know, right? So if China's coming back and it's such a big deal and all this kind of stuff, and it's not priced in already, why hasn't the market basically flown? So looking at my screen, it's trading 79.24, and the high was 82.60.
I suppose we're
So
seeing
why?
China's back in all the risk-on assets rather than in oil markets.
Yeah, but I mean, if China's coming back, that was the whole point, right? So the news last week or whenever it was, when everybody got excited, was all about hedge funds and Paul or Pierre, sorry, Anjuran saying that oil is going to fly and the demand is going to go up. I don't know how many thousands of barrels a day, and all this kind of stuff because China's coming back. And then people were also saying, no, OPEC Plus is gonna hold the staff, support the market. And then there was also the price caps, right? The price caps to Russian products coming on February 5th and all this kind of stuff. So all that is on the quote unquote news bullish side of the equation, right? So why is the market going up? Either people don't listen to the news, it doesn't make a difference, or basically something's up with that. Right. So
well, there is a
strange.
big narrative in the world this month. Let's talk to Robin Mills, CEO of Kamar Energy. It is this dilemma, Robin. We finished the month of January with sort of the irrational exuberance of Fed rate peaking and the concerns about global recession receding. Will all of that be confirmed this week with the central banks meeting, and they'll sort of affirm where the financial markets took us in January?
Well, you'd expect so. Yeah, measures of inflation, as you say, receding, the pressure for rate rises easing. But there's a bit of a paradox here, of course, is that the more that the economy looks like it's doing better, the more supply chain pressure and the more inflationary pressure. And supply chains are also eased, but they're vulnerable to a resurgence in demand. And I think Omar puts his finger on something here. It's oil prices, yeah, they've recovered a bit over the past month or so, but why haven't they recovered more? Given all the factors, a rather better economic outlook, China coming back, surely some effect of Russian sanctions, and nothing really, you'd say, major on the supply side in terms of a lot of new supply that would offset that. So yeah, it is a bit curious, and I think you can see why some of the prominent commentators have been saying, well, $86 a barrel so is a bit misleading. We expect to be at 100 or 105 later in the year.
David Rundell, good morning. Former chief of mission at the American Embassy in Riyadh and author of Vision or Mirage, Saudi Arabia at the Crossroads. David, meanwhile, the backdrop, we spent much of 2022 talking about geopolitics. We see it sort of roaring back into our headlines over the weekend, particularly in this region. A very hard right government in Israel doing sort of inflaming the situation there with the Palestinians. We've had some kind of an attack overnight on a facility in Iran. How do you read the current profile of the region as things seem to be sort of stressing up a little bit?
Well, I think that there are an unusual number of tensions in a normally very tense region. We have more things going on now than usual. That's true. I mean, political risk is always to be looked at, particularly in the Gulf. But now, let's start with what's going on in the Ukraine. That's a major war that's about to get bigger. You know, we're not here to talk about what's going to happen in Ukraine, but I think that these ideas that you hear on the legacy media day in and day out about how the Russian army is going to be defeated, those are fantasies. I think quite the opposite is more likely to happen, and that will lead perhaps to a greater escalation if the West is really determined not to let Ukraine be defeated. So that's a major problem.
Which, of course, Iran is an active participant in now with its drone technology.
Right. So there is an alliance, if you will, of sorts between Russia and Iran. And that leads me to another issue. And I'm sort of going geographically, down from north to south. People are not focused as much as they should be, perhaps, on what's going on in Azerbaijan, where the Nagorno-Karabakh corridor, which is now, there's a road there that is basically run by the Armenians, which the Azeris are thinking about taking back, or actually taking, because it was not really part of their country to begin with. That road connects Russia and Iran. Basically, as I see it, and I don't know this for a fact, but the way I see it is the Azeris think now that the Russians are preoccupied in Ukraine, so they're going to, and the Russians are in theory the protectors of the Armenians. So they think that maybe they can get this little bit of land that they would like to get when the Russians aren't busy. I don't think that'll happen. I think the Russians probably would get involved in that because they want to keep control of this road. They want to have this access to Iran. And I also think Iran would get involved because, as many people don't know, there are more Azeris living in Iran than there are in Azerbaijan. And there is an independence movement there of sorts. So they have a similar problem to the Turks and the Kurds. And so the Iranians would not be neutral about this. And quite frankly, neither would the Turks, because they are the big friends of the Azeris. So that's a real little powder keg there that does affect oil, because there is the Baku oil fields. And so that's something to keep in mind. And then, of course, you do have what you've just talked about, this long-term tension between Israel and Iran, and a prime minister who has stated repeatedly and clearly that he views Iran as an existential threat, and he's going to do something about it. And I think we should take him at his word. I have written actually that that is a.
Well, he seemed to do something about it last night.
Well, and I think he'll do more about it. So yeah, I think there are real geopolitical issues. I'm not a prophet. I don't have a crystal ball, but I just point out that the war in Ukraine is not a stalemate. The Russians are on the offensive now. I've said it before. I could be wrong. I mean, I'm not a prophet, but I think Bakhmut will fall, and that the Russian advance will pick up steam, and that will bring people screaming and yelling that we need to do even more. I've seen people, now they're talking about sending airplanes to Ukraine. I've even heard people talking about sending submarines. So this thing is growing, not getting smaller, unless somebody gets smart and decides it's time to negotiate, which again, I've said is for some time is the only realistic outcome. But in any event, so you've got that, you've got Ukraine, you've got Nagorno-Karabakh, and then you've got the Arab-Israeli, or not the Arab-Israeli, the Arab-Iranian problem. So yes, I think there's a lot of geopolitical uncertainty in this part of the world, even more than usual. It's a long answer, but hopefully I taught you something or told you something you didn't know.
Yeah, no, we'll come back to that. Omar, just sort of coming back to your unanswered question at the beginning, what's going on here, the reopening of China, all of this sort of optimistic outlook for the year ahead, and it's not necessarily been reflected in at least the front month. Are you seeing any sort of architecture across the out months, the idea of the curve backwardated into an attractive price in the future or contangoed into? Where do you see the structure of the market reflecting this second half of the year narrative is going to be amazing?
So basically the market is going to do, I mean, you always trade the market that's in front of you. Looking at stuff that's going to happen, 6 months and whatever, that's just, it's not what people do. I mean, they really don't. So you trade the market in front of you. The market right now is at a crossroads. It's either going to spike, like really spike, or it's really going to come off. It needs to do one of two things. It needs to do it now. So it's either going to flip like this or flip like that. What I'm trying to say is that even now, with this, so the Israelis hit Iran. Of course, there's no, condemnation. Everybody seems to be, no big deal. They're not Russians. So there doesn't seem to be any reaction from the oil industry. So you gave them China. It's like you have a pool of sharks. You throw in China, nobody does anything. You throw in Iran and drone strikes, and nobody does anything. You throw in OPEC Plus, and nobody does anything. Now there must be some kind of reasons for all that. I think basically, this week is going to be, because of all this, Fed and I don't know what, and peak this and peak that. But even with the peak stuff, everybody's saying, we peak interest rates, peak inflation. Market's not doing very much. I mean, markets have to, if they're going to start to trend up, they're going to have to break the highs and start going, and 7,000 S&P, and here we go. Oil needs to trend up, 120, 130, here we go. Everything is okay. The war in Ukraine has won, Sunday, whatever it is, and all this kind of stuff. But it seems like the narrative keeps saying Ukraine's going to win, it's clear, blah, blah, blah. And basically not many people believe that, or the money doesn't believe that. You say to them, peak, everything is okay, the US, here we go, but there's no money that's basically starting to bet that here we go. Same with oil. You tell them everything is okay, it's going to be a fantastic, I don't know what, and COVID, and people will fly and travel, and nobody's betting any money. Why? So my suggestion is maybe that the sentiment out there doesn't believe any of this stuff, doesn't believe it in terms of there's a bigger narrative that's waiting to surprise everybody. I read the story last week that hedge funds, or not hedge funds, I forget what they called, but they're basically, they move retirement money around, that they had $1 trillion of money sitting on the sidelines waiting to go into equities. Where is it? Why hasn't it gone in already? What are they waiting for? So all this stuff. So when somebody
it's kind of a waiting moment. I mean, wind in the sails of Robin. Any surprises to come this week? I mean, the narrative of economic slowdown seems to have got pushed to the sidelines. But I read a data point recently over the weekend that said car loan defaults in the US were higher. They're higher at the moment than they were at the peak of the great economic crash of 2008-9. That are we underplaying this or overplaying perhaps the soft landing idea, that this sort of lack of momentum in the physical oil market, or the front month at least, that this economic slowdown is more sizable than the narrative we had in the fourth quarter that got displaced in January could come back?
Yeah, look, I think it's hard to read, but I think everybody accepts there's going to be an economic slowdown. The question is just how big and when exactly. And you see, it's reading the tea leaves is a bit hard right now. And you see the surveys of economists. Some are saying, "Oh, we're already in the recession," or "We already had it," and some are saying it's coming later this year. So there's quite a lot of confusion around that. And I think the inflationary side is puzzling everybody as well. I mean, nobody under 50 these days even knows what inflation is, right? So it's, economists are kind of struggling with putting that back in their models. And I think that's the puzzle that I mentioned earlier. It's like, well, we look at how stretched all the supply chains are. Look at diesel in particular. Now, if there is a bit of an economic rebound and the economy is stronger, you will hit those supply chain constraints again, as we were doing last year. So the speed limit, we're driving pretty close to the speed limit of the overall economy. But it's also globally a very patchy picture, right? You've got China coming out of very slow growth related to COVID, but expected to pick up. You've got US doing pretty well. You've got Europe struggling a lot more. You've got India doing extremely well. So depends where you look also exactly in terms of the recession. And I think also we've been really scarred by a couple of very bad recessions recently. The COVID related one, and then go back to the Great Recession of 2008. We can also remember there's also such a thing as mild recessions like the one of the early 2000s. Where you don't get a drop in oil demand, you just get a bit of a slowdown. And I think that's probably the, fingers crossed, maybe that's the scenario we're looking at the moment.
Does OPEC face, Robin, do you think, any sort of difficulty in this meeting, or it's just a simple 15-minute rollover?
I think it's very straightforward. Yeah, I would be very surprised if there's any change in production policy or any change in recommendation at this meeting. Oil prices are okay. No particular signs of pressure in either direction. Still plenty to digest in terms of the Russian ban, the oil products ban, and even, of course, the crude ban is still just filtering its way through. So, I'd expect no action.
David, I wanted to get your thoughts. We mentioned there in your earlier comment the sort of the larger picture of layering the geopolitical narratives, and of course, and they all are interconnected. No doubt about that, coming right through to Central Asia and into the Middle East. But one you didn't end up with, which I'd welcome your insights on, is where are the Gulf states at this point in time? With the end of the collapse of the JCPOA, which was more or less the dominant narrative last year, that the region was going to sort of sail forward in this sort of reinvigorated deal. Now that's done. We start the new year with Iran declaring, or the declaration that Iran now has enough nuclear enriched uranium for multiple weapons. Where do you think the Gulf Arab states are at this moment in this position with Iran, and as it sort of moves into nuclear weapon territory?
Well, I don't think that they have a great deal of influence on how events progress. I think that they're caught in the middle. I think they're in a difficult position in that they cannot really influence Israel or Iran, yet they are going to be subject almost certainly to whatever conflict. In some way, they'll be influenced by a conflict between those two countries, and they don't really have the ability to influence it. So I think that they will be supportive of anyone or any idea that can defuse this thing. I'm not optimistic that that's going to happen, but I don't see them. I don't see them as a central player in how this evolves, except perhaps as a victim of collateral damage, which is a very unfortunate position to be in.
I mean, they have been quite vocal in the past about this obvious overarching paradigm, but not so vocal at the moment. How do you read that?
As I say, I think that they don't want to antagonize either side. They would very much like this thing to be peacefully resolved. They don't want to take sides. It's very much the same, I think you could argue, with their position on the if you will, the NATO proxy war with Russia. They have interests in maintaining good relations with both sides. And it's the same with China, quite honestly. It's the Gulf states have strong economic and political reasons really to have good relations with China and Russia. And they have to balance that against people who have less good relations with them or other tensions. So they're not a driving factor in how this ultimately resolves itself. I'm sure they're making their position known quietly, that they behind the scenes of how they would like it to be resolved. but I don't see them as playing a significant role in where it. I mean, whether or not the Israelis decide to attack Iran is not something that they're going to discuss, I don't think, with the Gulf Arabs.
David, just to follow up quickly on that, we've seen relative peaceful borders between Yemen and Saudi, and the Yemen conflict over the last number of months has calmed down a lot. Do you think that's at jeopardy with these developments, or is that separate?
That's a good question. Honestly, I don't know. I don't know the answer to that. Whether or not it's a complicated issue, and it's not entirely in the hands of the Iranians. So I think there were two issues there, really. One is that whether the Iranians would like to use this as a time to provoke greater instability in the world. And secondly, the Iranians do not completely control the Houthis, who have their own agenda. So I don't know whether the Iranians would decide to try to spur the Houthis to become more violent. And I don't really know whether the Houthis would agree to that at this time or not. So I couldn't really tell you whether this is going to affect Yemen. But I would agree with you that the situation in Yemen has calmed down, and the Saudis would like it to calm down. The Saudis, more than anybody, would like this war to end and have tried to end it repeatedly. And if it can be kept calmed down or negotiated, the Saudis would certainly welcome that.
Let's go to the survey question for today. Again, it's just focused a little bit sharply on OPEC. Should OPEC Plus agree to raise oil supply at meeting this week to keep market supply demand in balance with China reopening? Is there a need for more oil to come onto the market from OPEC Plus at this time in order to meet this? World's largest oil importing country has reopened, and should OPEC Plus react this week or not necessary? Your thoughts to keep the market balanced. Omar, wanted to get your views. I mean, again, a part of this sort of wider narrative of recent months. I mean, last year obviously was a very dominant narrative. That was the peak dollar amongst its peak rates and peak inflation. We had peak dollar. The dollar basket was up above 110. I think it went up to 113, was it, or something? But it's a very, very high. It's come off dramatically without necessarily any obvious reason of euro strength or sterling strength, but nonetheless it has. Your thoughts on where that plays in the machinations going forward?
Okay, so basically, if you look at the dollar index has in it, it's an index of other currencies. 60% is the euro, about 10% is GBP. It has other bits in there as well, including the yen. Anyway, so these things don't trade on their own. They trade in relation to each other. So the dollar index went up to about 114, call it 114.50, and has since come off down to about 101, let's call it, okay? So the dollar index, that rise that it had into 114 took it 12 years, right? So if you look at that, that's a trend that has been going on for 12 years. The fact that it's turned over is basically so it's at least going to correct that trend or start a new trend, but it's turned. So the length of time, if something, I mean, length of time is guesswork, but if something took 12 years to go one way, I think in terms of correction or going the other way, it needs to take 2, 5, 6, something like that. So I don't expect the dollar. So I think basically dollars drop down, will go back up a little bit, try and it won't get to 114, I don't think, but try and go up a little bit more, and then more weakness, which means that longer term, in all probability, if I was a betting man, and I am, I would bet basically that the euro over time gets, 120, 130, GDP gets to 160. Now, I know the narrative is that the UK is weak, and I agree with all that, and severely going to be basically beaten over the head with a stick in terms of economically. but the patterns on the chart say what they say. The other stuff, why and how and news, and I don't know. I'm I don't know, but I would bet that the GBP is going to rally into 150, 160 over time, and I think the euro is going to get 130, maybe even 145 euro against GBP. I think that GBP would be stronger, goes to about 80 cents from the current 88, 85, then 85 down to 80. So, and that's always been something. I mean, the currency markets are the deepest markets, so you have to pay attention with the message that they're sending, which is very interesting because usually when you have a recession, the dollar goes up, not down. So it's fascinating. So
another counter sort of intuitive counter cyclical outcome at the moment. Robin, I wanted to get your view. I'm going to speak a little bit of supply as we go into closing comments here, but one of the additional elements as to why prices may be softer, obviously there isn't a lot of stress around supply at the moment, and one of those is Iranian oil barrels making it to the market without any sort of overt sanction interruption, and a lot of oil that Iran had in storage, floating storage, upwards of 50 to 60 million barrels, and some say even 100 with condensates. But your thoughts on that Iranian supply to market, and does that continue, or does at some point that end?
Yeah, indeed, the Iranian supply or exports have jumped significantly. Looks like the US will say they're still enforcing sanctions, but I think clearly the effort on enforcement has gone down significantly. The Iranians are getting more out, and that's probably deliberate. I think partly it's saying, well, this is competing against Russia in China, and it's also helping keep oil prices moderate. Those are both objectives of the US administration right now. Russia's the bigger enemy at the moment. And anyway, the sanctions have, they put a lot of pressure on Iran, and sanctions obviously continue, but they're not succeeding toppling the regime, and don't look like they're doing so. So, now there's some other tools in the toolbox being taken out, as we saw, the past couple of days. So I think will be the view on the Iranian sanctions. And whether this continues, I think it probably does continue as long as the Russia situation goes on. However, of course, I think as we've been discussing, that's always leaving aside the potential for geopolitical escalation and and the conflict in the region, which Iranian exports, of course, again could well get caught up in. But just from point of view of sanctions and normal trade, I think we're into a regime now of lower enforcement and generally higher Iranian exports.
Just closing out with the survey result, David, last word to you again on supply. No, OPEC doesn't need to raise supply to balance the market, according to this room. David, as your other hat you wear as an independent oil producer in the shale patch in Texas, with interest rates now sort of migrating towards 5%, what impact is that going to have on any ability to bring U.S. oil production, the shale patch, back to pre-COVID levels?
Well, I know mostly about the Permian Basin.
Basin.
And, the Permian Basin production keeps growing up. It was 5.5 million barrels, about 20 billion cubic feet of gas, billion. Roughly, half the rigs in the United States are operating in the Permian, and the Permian is growing. And I said that a year ago, when everybody was saying, it's never going to come back. It is coming back, and even the IAEA, or what are they?
IEA.
Yeah, IEA. They're saying that global demand is going to be, what did they say lately? The most recent is 104 million barrels.
For this year, coming up by 1.7 million barrels of additional demand in 23.
1.7 million, but what's their total then for global demand on a daily basis now?
Global demand this year is due to, I think, reach over 101.
Yeah, that's what I thought. It's 101, and like next year it's going to be like 103 or something like that. So according to them. So, I don't know if they're right, but they certainly see demand going up. The Saudis continue to invest in more production. People in the Permian Basin continue to invest in more production. So I anticipate that will continue.
Yeah, interesting. Well, we'll wrap it up there. Oil supply it seems to be amply available. The other thing we didn't mention that's going to happen this week, of course, is the EU embargo on Russian oil products, which is going to be another stress on the markets and its impact, particularly significant in Europe, given how dependent they have been up till now on Russian diesel. Omar Najia, thank you very much. Global Head of Derivatives at BB Energy, Robin Mills, CEO at Kamar Energy, and David Rundell, former Chief of Mission at the American Embassy in Riyadh, longest serving U.S. diplomat ever in the Saudi Arabia. Always welcome your insights. Thank you, David. Have a great day, everybody. 10:30 UAE time. We're here dissecting the markets. All the best. Thank you.
Thank you.
Thank you.
Take care, Robin.
Yep. Thank you, David.
I didn't get a chance to say hello to you, but nice to see you too again.
We didn't, but good to see you too, David.
Are you in Dubai now?
That's right. Yeah.
Yeah. Well, someday we'll get together. I
Oh,
look forward to
please.
that.
Drop
Take
me a
care
line.
then.
Okay.
Bye-bye.
Bye.